Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade nightly video for 7/11/2023. That's July 11th, 2023. It is the day before the CPI. Let's get started there. We'll have the CPI data. It'll take place pre-market tomorrow morning. Right there, that's your East Coast. That's 5:30, or the West Coast here, 5:30. East Coast will be 8:30. That'll be pre-market. 1 hour before the market opens, we'll have some CPI data. What are the expectations? Just taking a quick look at these numbers here on the Intraday event, Market Watch calendar. We're looking for about a 3.1% increase in the CPI Consumer Price Index, which is down from the previous 4%. That is year over year. We'll be looking closer at this number, which is month over month. Looking for an increase in the inflation numbers, Consumer Price Index of 0.3%. So what happens on the game? Let's talk about that. Before we get there, we'll just sort of see what the week ahead. We'll come back to this, but major is going to be Wednesday CPI. Thursday will be behind that PPI, which is your inflation data on the producer price index. We'll have earnings from Delta Airlines, and PepsiCo. But we're going to start our earnings. Earnings will begin in earnest on Friday. Some of the financial names, which will be JP Morgan. We'll look at United Healthcare, and then Citigroup and a few others will be reporting, kicking us off on Friday. But we'll have videos before those happen. Tonight's video is going to focus on where we are before CPI. So let's do that. The plan for it. What if it beats? What if it misses? What are the expectations? Again, right there are the numbers. What I'm going to look at is this little matrix here. What if it beats? And beats just means if inflation is hotter or higher, running a little bit above what the expectations are, maybe what the market has already priced in, and what it says about the Fed, the Federal Reserve, raising rates. So here's how I'm looking at and getting ready to trade on an intraday basis, the CPI report. But the bigger picture will play as well. And of course, the rest of the week can be set in motion by the CPI tomorrow morning. So if we get a number above 0.3, look for the market to potentially fall. What would that mean? It means the Fed is going to raise rates and inflation is hotter or higher than expected. But there's one little fly in the ointment. Before CPI, we already have a 93 almost % chance that the Federal Reserve is going to raise their interest rates from 5% up to 5.2. Well, can you really go from 92 to 96? Sure you can. But the market, I think, is already pricing in a rate hike. So that might not be as bearish, or at least as concerning, if it's a big beat, sure. But a little bit above, maybe not, because the market seems to have that priced in. But what if it misses expectations? If it misses, that means that inflation's lower, coming in a little cooler than expected. That's a good sign. That's what we want. We want inflation to come down. Generally speaking, that's good. But will the Fed look at the CPI and decide for their meeting in July 26? No, not going to raise rates. In fact, going to keep them the same. It's about a 7% chance that happens. I don't think that the CPI data, unless it is majorly lower than 3% or month over month, 0.3%, not sure this number or the outcome is going to change that much. If there's a big beat or a big surprise, sure, and it's not this number I'd be looking at. If it's a big up surprise, in other words, well above that 3.1, I would not be looking at this one. That is going to happen. That's a fait accompli. I'd be looking for September. And that's the Fed funds rate probability for a September rate hike. That's what we want to be watching here in TheoTrade. Right now, the odds are for keeping rates, not where they are now, which is 5 or so %, but hiked up here in July and then maintained. That's a pause. That's keeping rates the same in September. But there is a 24% chance of another rate hike. That's 2, right? There could be 2 in 2023. Might not be in September, though. And we can watch the numbers on the future percentages. But that's what I'll be watching in tomorrow's session before the market begins. Any big surprise And these numbers of probabilities change. If it's hotter, that could be bearish for the market. And if it's anything cooler, that could be much, much, much more bullish. But again, not sure it's going to change the pathway or trajectory that we're on, which is a 25 basis point rate hike at the end of the month. What about those expected moves? Let's put this in terms like a binary, like we would do for an earnings play. Now, these are updated. I need to update these numbers and take us to the current numbers. But again, month over month, 0.3, year over year, 3.1. And the expected move is roughly 36 for the S&P and about 160 for the Nasdaq. Let's take a quick look at where we are trading after hours. So the S&P is pushing in or pricing in a little bit higher. The rate probability, at least the implied volatility probability, went up a little bit, and that after hours is pushing into about 35. So that's about the same. I should say that's the same for the probability 35, implied volatility, and in the Nasdaq, about 160. So a little bit the same as it was just a few moments ago. So market's pricing in about 160 Nasdaq candles up or down on a surprise. And for the S&P pricing in about 35. So for the game plan tomorrow, we'll look at this number here. We'll take a plus 35. We'll take a negative 35. And that'll be the play. So roughly speaking, quick math, back of the envelope math here. That's going to put it up to about 4,503 or so. And take that down to about 4,4, roughly speaking, 35. That's roughly speaking your expected move. As an intraday trader, if the market moves up to that upper number, that could be a good little intraday short. If the market moves down to the lower, that could be a nice little intraday buy. But we've seen this movie before, and we will be prepared for a double the expected move, which means about 70. This is your times 2, double the expected move, up or down. That will be on any major surprise from those numbers we looked at. So that could give us a big trend day to the upside, or perhaps a big trend day to the downside. Just looking quickly at our volume profile, this is the big picture. The market's close to those swing highs, just about that 4475, 4500 in the futures, not that far away. The uptrend does continue, but we're in the middle of that range. Nasdaq is showing a little bit more resiliency, at least in terms of its 2023 movement. But what has been, let's say, mildly surprising is the flatness in everything but the technology sector. XLK technology, financials, down on the year. Remember, earnings come out this Friday. Discretionary, that has, remember, the biggest stocks in the discretionary sector are Amazon and its Prime Day, Tesla, and the others. But outside of those, again, industrials are slightly up on the year. Materials flat. Energy's down on the year. Staples are flat. Healthcare is down on the year. And then utilities, of course, is the weakest sector. They're down on the year as well. So we do still have the concentration in the big market cap names and in the technology sector writ large. So it's the Russell, which has got the boost and has 3 days in a row of boom, 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 up, 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 trend, 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 just on the short-term frame. That's your Russell, and the Russell is your small caps. I like to see these just on this visualize tab, and you see that the bulk of the Russell small cap has been green these last few trading sessions. It's been the monsters of tech, especially yesterday, which was a split day where these stocks, in part because of rebalancing, were all down, but everything else, almost literally everything else, was bullish. And that was Monday. So we'll continue to watch the big monsters of tech. But remember, there is a market outside of the monsters of tech, and there's the whole market outside of those 6 names. The Russell is indicative of that, which is pretty much unchanged to slightly up on the year, and the Dow, again, unchanged to slightly up on the year. So always be careful in that sense. We are seeing a bid back into crude oil coming up, and that could be a little sign of inflation. And the bond market has gone off to its 2023 low. This is TLT. It's about 98 or so per share. ZN is going to be your 10-year Treasury note. That's back to the bottom as well, which is around 110 on the futures contract. ZB is your 30-year bond. That again is at lows, continuing off the downtrend, but it is the strength in the Treasury yields, which is something we're going to be watching with anything to do with inflation. Tomorrow's CPI, purely inflation numbers. And again, this is the 3.9 or 39 or 40, means 4% of the 10-year Treasury note yield. All the way here, the high is about 4.4%, and the lows of this year, 2023, is about 3.4%. So we've been bouncing like the equity market and a little yield range. So see the yield, see the Russell, see the flatness, and we'll get some insight into the inflation data clearer, bringing a little more clarity into our trades. But that'll be CPI tomorrow, PPI on Thursday, and then we'll start to see the financial sector and some of those stocks will be reporting earnings, and they're right around the corner. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for July 11th, 2023.